All right, welcome to the Invest with Rules November member ticker submission. Talk about a mouthful. This is my favorite video. Once a month, we take our members' tickers that they submit, we run it through our billion-dollar fund manager and our trend roadmap research. Mike, let's dive in. How are you feeling? Are you excited?
Absolutely love these videos, and it's the day before Thanksgiving. So, as people are watching this, it's either Thanksgiving or maybe the long weekend. So, hopefully, you enjoy and we give you something worthwhile here.
Yeah, so absolutely. Again, wishing you and your families a wonderful Thanksgiving, especially if you're here in the States.
Yep.
And we would love for you to take tomorrow off, and hopefully this video will carry through the next few days. And we'll be sending you emails when the market is open. So let's dive in. And before we do, world's quickest disclosure, per the usual, this is just information. It's not a direct solicitation to go buy or sell anything. I'm going to be sharing our research that's based on math and data. And sometimes you'll even hear us use some opinion, but please filter it for your own situation. There's lots of risk out there. The market is trying to come back. It's really exciting. But please do your due diligence. You know the dance. All right. So, trend roadmap. We're going to go through kind of our philosophy first, then we're going to go through the market, then we're going through a whole bunch of tickers. So, buckle up. There's probably your tickers coming. So, be prepared. This is our trend roadmap analysis at its simplest. It has four stages, which has some pays homage to the great Stan Weinstein. Ours, the engine is different. The engine is proprietary. We're going to share a lot with you. So it has a short-term trend and a long-term trend, and we marry them together in a multi-time frame momentum. We have a stage one basing phase, which comes, we call it a U-turn. We're using fun car analogies and driving. After a very difficult pullback, you get these U-turn signals. Short term's up, long term's down. This is where we at times will take partial or half positions. Stage two, we call these gas signals. Short term, long term is up. That life is great. This is where we want to deploy most of our capital. This can last a very long time and it can be very fruitful. Stage three, topping, we call this a coast. The short term is now down. The short term is roughly about 30 calendar days. The long term is roughly a year. We have our kind of our signals and how we follow it. There are many times where a coast signal will be temporary and it flips back to gas and the party continues. There's also times where a coast signal is your early warning before a break signal, a stage four decline, short term, long term downtrend. That's what we want to avoid. That's where all the pain happens. It lasts, sometimes it's violent, and this is where all the stress comes. Mike, any thoughts on the picture of our trend roadmap? Anything I missed?
No, no, we're just trying to break it down, keep it digestible. So, yeah, thanks for the overview.
Okay, here's the market today. The S&P 500 this morning is on a 9 out of 10. That's based on us looking at several large cap US, foreign, small cap indexes. So the market is so back to the gas coast. So you just are coming out of a coast signal back to a gas signal. So today would be day two of a gas signal. So short-term, long-term uptrend. And you're kind of, I drew a whole bunch of lines. You had a very violent pullback a couple days ago. We held that support area from October and we removed our hedges. So we had some hedges going down in here and you're now breaking out. You're breaking today over a trend line that I drew in blue. There's definitely resistance coming. So it would be great if it just rocketed up and out. Unlikely, but that's where we are. We have drastically increased our exposure again, and we're watching our portfolio heat. Mike, what are your thoughts on the S&P 500 and our trend roadmap analysis?
Yeah. Despite how we feel, we can't argue with what's going on in the market. I really appreciate all your lines. My simplistic brain tends to favor the support and resistance lines, the horizontal lines. And so, yes, you're absolutely right. The trend line is, hopefully if the market holds up today, that will be a positive. And then I think the next two horizontal resistance lines, as soon as those become support, to me, that's going to be a really, couple of more positives for the market. So we'll see what happens.
Yeah, and this is a shortened holiday week. There's no market tomorrow on Thanksgiving. Happy Thanksgiving. There's a half day on Friday. So this could be who knows, this could be an easy pullback to the support area. So we'll see how that works. If we look at the gauges, Mike, why don't you kick us off on the stock market gauges and what we're looking at?
Yeah, those top four gauges. We talked about the market score. In fact, as we're filming this, it's flirting with a 10. So don't be surprised when you watch this if the market holds up that it is a 10. Percent invested, we are right in the mid 70s. And so if the market kind of holds up, you could probably see us adding risk today. We'll see how it holds up, or if it does hold up. Portfolio beta is essentially kind of how we're moving with the market. It's been ticking down because our exposure has been going down, but now it's ticking back up again. And then the most important one in my mind, with regard to risk management, portfolio heat. So our portfolio heat is ticked back up. It was in the twos, and now we've added some exposure. It's ticked back up into the low fours, which is totally fine. And essentially, what that is if all of our trailing stops got hit over the next couple of days, we estimate that our portfolio loss in total would be about 4.2%. So that's why we watch that closely and we'll adjust stops accordingly to control that portfolio heat. Scott, you want to take the rest of the gauges?
Yeah, to the far right is relative strength, to the far left is relative weakness over the past 2 weeks. And we are sharing with you our signals, and we're sharing with you our roughly 30-day volatility adjusted momentum or return. So it's adjusted for volatility. So you have healthcare acting very strong, the S&P acting strong, gold acting strong, and it's really came back fast. That was really fast. It kind of moved from the left to the right really quick. We added additional exposure to gold and gold miners. What's acting miserable is Bitcoin. So it is definitely not acting as an alternative currency. It's acting more like a tech stock gone wrong. So even if you love
Yeah.
Bitcoin and it's great, it's still a break. And breaks can get nasty. And I'd hope it recovers because that would be great for the overall market. But we're just following the process, following our signals. And we go down to the mega caps, and you'll see that the strength is in Eli Lilly. The strength is in Google, which has been really shocking the AI world. And you can kind of see where Amazon, NVIDIA, Exxon, Tesla, Microsoft, Oracle, they're all on coast, and then Meta's all the way off to the break. So you're seeing more green emerge, which is great to see, but there's still some issues with some of the beloved NVIDIA and Meta. So we're going to watch that close to see if there's some life and if it can kind of move its way back to the right. Um, so what we're going to do next, we have a lot of tickers to cover, so thank you for submitting those. It helps us to see what you're looking at. This is always a fun experiment where we start with the entire universe of US traded stocks. Then we do some cuts. So we go for there's roughly $1 trillion every single month that we are looking at, and we're saying, okay, well, what are these billion-dollar funds? What are they buying? What are they really going after? And that brings us down to 600 tickers. Then we do some additional cuts for accumulation for buying. We need to see some earnings growth. We want to see multi-time frame relative strength. And then we put it through, eventually that brings us down to 100 positions. And then that brings us to the trend roadmap, which we previously discussed. And we're trying our hardest to find the gas signals, the short-term, long-term uptrends that are kind of pulling up. So if it's an ETF, we just put it right through the trend roadmap. If it's a stock, it goes through this whole process. So if you give us a stock and it's on our list, we'll mention it. We'll do our best to. And if it's not on our list, then we're going to be simply using our trend roadmap analysis, which brings us current day to day on the trend. And every time as November is approaching the end of the month, we're going to be getting new data, which would be 30 days delayed. And then we put it through our system to say, okay, well, we're looking over time. What are the large funds accumulating? Mike, what did I miss when it comes to the billion-dollar fund manager funnel?
Yeah, the only thing I'll add is we purposely throw a little bridge icon in the graphic up in the upper, exactly right where Scott's pointing, because essentially the data, our monthly data, becomes kind of older. And the bridge is our trend roadmap. And that's what keeps things fresh. That's what keeps the analysis fresh and allows us to not necessarily be depending on, 30, 60-day old data. So that's kind of what I like about our process is we've got the analysis, but then we get that bridge to give us those fresh signals.
And we update the rank daily in the afternoon
Yep.
before the trading day. So here are a whole bunch of tickers we're going to be covering, and we'll go through that in detail. And let me just hit escape and move over to TradingView. Now, this is something new to us. So I want to start with we are experimenting bringing our trend roadmap analysis to TradingView because it's really it's a programmable software. And our intention is not immediate, but we really need to kick the tires here. And this is an example of us kicking the tires. Is at some point, if you wanted to use TradingView, they'll always have some specials at certain times of the year. Our hope is this is available to you on a free version. So if you want additional services from other platforms, we use Market Surge, we use TradingView, we use Thinkorswim, then please go ahead and do so. But that's only on your accord. This is the hope is to build something that is usable without additional cost. So if you like this and you're seeing this for the first time and you're like, this is super fun, interesting research, consider being a member of Invest with Rules. And on top of that, we do have a totally separate advisory service where we do this for clients. So if you want us to do this for you, just reach out to us. There's Invest with Rules, and then there's IWR Advisors. Let's dive in. Mike, why don't you be the host, and we'll start with Adobe.
Yeah, and just to level set, I think you might have said this earlier, but just in case. So, trading view chart, the moving averages we're showing, the black one, and we're kind of lining up with Market Surge IBD here. The black one is the 200-day SMA, the red is the 50-day SMA, and the green is the 21-day EMA, just so you know kind of what you're looking at. And of course, Scott will have some trend lines in here as well. So let's go ahead and kick it off with Adobe that Alex submitted.
Adobe is difficult. I would not touch Adobe. This is a pass. This is I assume at some point the bears are going to stop shorting this thing. I'm going to zoom out a little bit on a daily chart, but you can kind of see that it went from 491 and now we're at 318 and it just falls on heavy volume gap down, another heavy volume gap down, another gap down. And I get it, you're value picking, but why not just simply wait for maybe a U-turn, but more importantly, wait for a gas signal? So if I zoom all the way back out, we got to go hard to see, but you got to go back to 2023 or almost COVID time. So you're just flirting with the 2023 lows right now. And if they don't have a decent next earnings report, you're going lower. And I hope that this is your support area. I would maybe set an alert where I drew my blue downward trending line. It's okay if it goes a little higher before any action, but this is a tough one. I would say I don't see funds here. Number one, number two, the trend looks miserable. Short term, long term downtrend. You're on a break signal. Caution. Mike, what would you say to someone who's been riding this down or maybe even looking to add a new position?
Well, I think you covered adding new position quite clearly. If you're in it and you have been writing it down, my stance, and obviously we are not going to recommend what you do. You need to follow your own process and risk management. But personally, what I'd be doing is I would definitely be cutting my position and possibly completely selling out because it's on such a solid break signal.
Yeah, and they always say like nothing good happens below the 200-day simple moving average. This is just a general trend line.
Yeah.
Look how awful that's been since it hit
Oh
that.
yeah.
So we're gonna keep moving here. Let's go
Yep.
to AMD.
Yep. So John submitted AMD. It's currently number 78 on our billion-dollar fund manager ranking. It's on a coast. It's been on a coast for 8 days. And by the way, just as another quick gut check, when I say 8 days for a coast, that's 8 calendar days. And you're going to see the actual trading days on TradingView, just to make that clear.
Yeah, so here's your U-turn on the 24th. Here is your gas signal on June 23rd, and that's been pretty dynamite. The things also we're looking at, these are just kind of open high-low close charts or daily bars. And the orange squares at the bottom are overheats, which to us mean if the relative strength index measuring it to itself is over 68, it just says, hey, it's gone up a lot. And anything that has a green arrow, nothing's perfect, but it's to us, it says it has a probability of potentially moving higher. So it has kind of this momentum swing that we're looking for within a gas signal. So it had a huge gap up in October, and you can kind of see how that would be overheated. And then it tells you that there's a lot of green arrows that maybe it could go higher, and it did. And then the green arrow fell off, and then that was your high. And you violently pulled back with the market and the semiconductor index, and you've held the support back here in late September, October. You held this support here. And if you go all the way back to 2024's highs, and you kind of see that range area, you gave back some of this gap up, and now you're holding it. So my opinion is on a coast signal, I would personally, I'd be waiting. This is a billion-dollar fund manager stock, correct?
It is absolutely 70. Actually, I think 78. Yeah.
Yeah, so it's in the lower range of the billion-dollar fund manager stock. I would wait for a gas signal. That would be me. Um, this is your undercut and rally. So this would be your area. Your risk isn't very much anymore. So anything kind of below, call it 200, 204, that's your runaway because that's your really major support. And could it kind of come up to 225, chop around, come back to highs? That wouldn't shock me. But why not just simply wait for a gas signal? Any thoughts on the big semiconductor advanced micro devices?
No, no, let's keep chugging on to the next one. Steve asked us to talk about App Loving, APP. It's a billion-dollar fund manager stock, pretty close to the ranking of A&D at 76. It's been actually it's a brand new gas signal. Here's the interesting thing, Scott, is it's been on a long-term uptrend signal for now going on 930 days for a 25 plus bagger. If somebody was lucky enough back in May of 2023 to pick, yeah, there you go, to pick that up. Just an amazing run, obviously. So I'll flip it to you.
No, thanks for sharing that. So that's pretty cool. So at this would have been your signal. So you got your U-turn at $12. You got your gas signal at roughly 18, $19, maybe somewhere in the 20s. And wow. I mean, if you have a gain like that, there's no break signals. You just hang on. And that's pretty incredible. So you see a whole bunch of overheats and then it cooled off. And AppLovin is a very big player helping businesses get an app, helping businesses get on all the devices to help them sell more. This is really good. I like this setup. So you have a really difficult shakeout in this coast signal, and you fully filled the gap, which happened in September. It's logical that you would come down and test the highs from the February high, and it will zoom in a bit more. I think this comes up and hits its head, at least on the trend line. And given the funds and given the gas signal, I think it climbs higher. Any other comments on App Lovin'?
Yeah, I think this is really the tale of two cities. You got to either look at it like if you're new into this or it's a new trade for you, you look at it one way, and if you've been in this for quite a while and have had a lot of that uptrend, then you look at it a different way. So I think it's all in perspective.
Yeah, and just have your risk managed. Know what your risk is. So whether it's this kind of shakeout low, but yeah, that's today's gas day. So well done.
Yep.
We're gonna move to Bright Spring Health Services.
Yeah, Jim asked us to talk about this one. It's been on a gas now for 7 days. It is not covered by, it's not a billion-dollar fund manager stock. It's not covered. So we don't have necessarily a rating on that with that regard. The last thing I'll mention is that it is on an overheat. It's been so in a couple of days now. Overheat essentially is that you just be cautious. And I think you covered this a couple of stocks ago, but it's RSI over 68, and that's what we call an overheat, where there's a kind of we call it a higher chance that it's going to pull back. So just be careful.
Yeah, so short-term, long-term uptrend, overheat to us means be cautious, be patient, just wait. That's
Yeah,
what it means to us.
Yep.
If you look at this gas signal here on November 19th, that would have been our reload day if you were looking to, if you like this company, simply based on technicals. That would have been the undercut of November 4th, which would have been nice. And it broke out of and over this congestion. You can see how the green arrows were there and the green arrows were there, and now it's just a little bit extended. So I would expect this to pull back into the 35, 34 range before making another shot higher. But this looks technically fantastic, so I like it a lot. I'd be patient, wait for a pullback. We're going to move to CPRX, Catalyst Pharmaceuticals.
Yep.
Any thoughts?
Oliver submitted this one, and it's another ticker that's not covered in our billion-dollar fund manager database. It is on a gas signal. It's been on a gas signal now for about 15 days. It did the U-turn about 56 days ago, and since the U-turn, it's up almost 12%.
Okay. I'm going to start short term. So you are in a short term, long term uptrend gas signal. That looks great. You would have gotten a huge gap up on November 11th, and it would have pulled in, given you an opportunity, pulled in, giving you an opportunity. That's your overheat. It says be patient, and then it forms a teeny tiny little pullback. And then you got another opportunity on the 21st, and that's kind of what we're seeing. It's kind of stuck in this congestion. It's a really wide, volatile pharmaceutical company. This is how I would see it long term. So it's been choppy and sloppy and very volatile as most pharmaceuticals can be. So you had your U-turn on October 1st. You kind of broke out of this strange looking kind of a low cheat area on the U-turn, and then now you're back on a gas. So um, it's a little extended. You can kind of see how far it is from the 21-day exponential and the 50-day simple. Um, I would be more patient here with this one. It's on a gas signal, but I would like to see it get up and over. Any thoughts, Mike, on this one? This one's kind of a tougher one I assume it's probably maybe it's not super consistent with earnings, given how incredibly volatile and small cap this probably is.
Yeah, I agree. And I think you kind of have to look at this one shorter term. And it is making kind of sloppy higher highs, higher lows. So yeah, just be cautious. And I personally would probably position size a bit down on something like this, considering the volatility.
Yeah, so this one is what does it says? Develop prescription drugs for neuromuscular diseases and disorders. So, I mean, this is kind of a really large, crazy cup, is really what this is. And it's just been going for a long time. So, you're still kind of coming up the right side. So, it wouldn't shock me to see it come up to 26 and make another push higher being on gas, but prepare yourself. This one's really volatile. We're
Yep.
going to oil. We're going to
Yep.
Chevron.
Chevron is the next one submitted by Bob. Thank you, Bob. And it is on a clear, actually, we're showing here. It must have moved back to a coast from a break. So it flashed when we were actually earlier today prepping this, a break. Now live, real time, it's a coast. And but as you can see, it's been kind of relative chop fest. I'll let you take it away.
Yeah, in full disclosure, we have a half position on equal weighted energy tickers. They are making the turn. This is on a short-term downtrend within a long-term uptrend. I guess today would be day one. So there's some hope. The 200-day simple has been acting as support. Um, to me, I don't think this isn't on our billion-dollar research, correct?
I do not think so. Let me just double check.
I'm going probably not. I would simply set an alert
Yeah,
above
it's not.
156 or just wait for a gas. So I'm going to go, unfortunately, on the shorter side of this one. I would be patient. Could this be some version of a double bottom before it kind of comes back up and gets back over? And could it jump over 156 and start climbing and make its way to 162? I think it probably could. But today I'd be patient. We're going to Danaher, DHR on a gas.
Danaher, submitted by Mark. It is a billion-dollar fund manager stock that's currently on a hold. Hold meaning that we didn't see any significant change in what our billion-dollar fund managers were holding, kind of plus or minus. It was kind of in the same place month over month, which is not a bad thing. And it's been on an uptrend, a gas signal for 41 days. up about 9% in that time.
Yeah, so trend is your friend. It looks perfectly fine. You're now outside of the overheat. So you had this nasty pullback from 274 all the way down to 174 and break, U-turn, break, 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 U-turn. And then you actually got your gas signal on a really big volume gap up on October 1st. So that was your tell. If you were looking at the trend line, it actually came down, kissed it one last time on a U-turn, and then did another gap up. So there's definitely a change in guard, and this could go a lot higher if healthcare continues to lead the charge. I think this one looks really good. So if you're more of a value-oriented picker, you're okay with slower growth, and you're looking for more of a defensive name for your maybe growthier part of your portfolio, I think this looks fine. We've been moving the ship in our level two ETFs. We have a healthcare position, we have a biotech position, we have a medical device position in the ETF space, and this will fit a little bit of that as well. So I think it looks positive, and it potentially has a long way to run. Um, Again, there's a lot of resistance, but that can be overcome. Any comments before we go to Jim's Brinker?
Yeah, let's definitely go ahead and eat with Brinker. That is a billion-dollar fund manager stock number 35. It's actually been coming up the list. This is an interesting one where it went to gas a couple of days ago, but it came out of the chute as an overheat into gas. So maybe when you comment, Scott, it was a U-turn, came into gas, automatic overheat, meaning RSI over 68. What are your thoughts?
I don't know about you, but I sometimes when I'm watching sports, I feel like Chili's, which is Brinker's Chili's
Yep.
and Maggiano's, their Chili's specifically is fighting the higher prices at fast food restaurants. So they're trying to give you more and they're trying to compete, which I think is really interesting. And that's where you've seen the stock really boom at the end of last year. So it went from 36 and it came all the way up to 191, a huge run. And this is a consolidation. And what I'm seeing is a short-term and long-term gas signal. And it's made a really violent move back up. And you undercut the low of April, you undercut the low of October. And what I would expect, again, I don't have the crystal ball. The trend is your friend. The funds are here. I wouldn't be shocked if we saw a lot of fun buying during this pullback, is it's going to pull in and it's going to give you a chance because you're on an overheat. And I would assume, given the funds, given the trend, that it will break over this 152 level, get in this chop area of the 160, and then make its way back to 183. And the fast food fight fighting McDonald's and Burger King, they have a real footprint. So I think this is really interesting. It's finally given you a shot. I think it will give you one more chance of a pullback, and then off it goes. We're going to go to EOS Energy, a small cap in the, I think it's oil and gas.
Yep, it was submitted by Florian, so thank you. And it is not a billion-dollar fund manager stock. It's on a co-signal. It's been actually, interestingly enough, it's been on its long-term uptrend. This is another one. I bet you when you zoom out, you'll see this. It's been on a long-term uptrend for almost a year and a half now, up almost 8 times. So almost an eight bagger. Yeah, I mean, look at that. Look at that. Nice run. But you can see some decent volatility there. But then if you zoom in, it went to a co-signal about 2 weeks ago, 13 days ago.
Wow. Well, first, I apologize. This is a low-cost battery storage electric utility industry stock. So forget oil and gas. Sorry about that. So here's, I mean, this is what dreams are made of, right? $1.45 to 13. That is nuts. If you caught this, incredible job. If I zoom in, you kept, I mean, look at this gas signal on the 18th, and it just kept ripping and it got overheated and then overheated over. I mean, look how long things can get overheated, but you still got these green arrows saying there's still this propensity that it could go higher, and you finally get in your base. You undercut this structure here in October. Um, yeah, so the short term is under some pressure, but the long term trend is still there. I would just simply draw a line right where I am. And as long as you're above this low with maybe a point or two, I think this continues higher, and I think it'll turn to a gas and give you another chance. And obviously, I assume this one loses money, so be really cautious and position size down. But this could keep going. So this looks really interesting. No funds. The trend is under pressure, but I think it's going to turn to gas pretty soon at probably around 1450, mid 14s. It'll kind of come back. And there's your support. So you're not taking a massive amount of risk. And obviously, this thing can gap up or gap down. Um, but will it form a head and shoulders? Here's your head, here's your left shoulder. Will it form a right shoulder? Maybe, but that's still, I mean, a great return that you can get, even if it popped into the 17s. So, um, caution, small cap, losing money, but really interesting. So thank you for sharing that. We're gonna drive our gas signals to General Motors.
Yep, GM was submitted by John. Thank you. And it is on a gas signal. It is $1 billion fund manager stock, but it's an NI, needs improvement, meaning that in our analysis of roughly $1 trillion of assets, of essentially purchases, that we are seeing decumulation. So the guys that we follow are kind of, selling out of GM. Now, is that necessarily a reason to automatically go and sell? Not necessarily. You follow your process, but just a note, it's an NI for us. And it is on an overheat as of today. And last thing I'll mention to you before I put it back to you, Scott, is it's been on its long-term uptrend for about a half a year, 153 days, up 49%. Not too shabby.
Yeah, that's way better than the market. Here's a cup, big, tough, sloppy cup. Here's your handle, breakout failure handle, and it gapped up on huge volume. And it's been running ever since. So if you're in it, great. If you're not, the overheat tells us to be patient and wait for a pull-in. That's as simple as I can get. Yeah, I would say um, trend is your friend. Here's you got your gas signal here. Who would have known? Maybe, yeah, earnings. I went to bought 2 days before earnings, and you got the gap up, and it's held the gap up. So, um, yeah, you have a very, very impressive bearish to bullish reversal. And I think this is going to pull in and give you more chances, but that's GM. I think the trend is your friend. Okay. I feel like everywhere I go, Mike, I hear Google. Google, Buffett's in Google, big money's in Google. Google is now your AI leader. Um, what do you think about Google from what you're looking at?
Okay, so Mark submitted Google, thank you. And yes, there's especially in the last week, there's been a lot of news stories about Google possibly pulling business away from the kingpin NVIDIA. So you've seen a bit of NVIDIA pulling back, and you've seen Google obviously benefiting. So we'll see how that all shakes out. As far as the actual stock itself, it is $1 billion fund manager stock, but it's a hold, an H for us, meaning we didn't see signs of accumulation or decumulation. But it's an overheat today. It has been on its long-term signal for about a half a year for an 84% gain. Not shabby at all.
Yeah, so this is where it would have been the most ideal. This was a really choppy, sloppy base,
Yep.
and it came up and it consolidated, and then boom, off of a really great news. And it's really this is a gap up that totally worked. And here's how I see it today: is if you're in it, I see no issues. If you're not in it, it's on an overheat, so let's be patient. You're in this incredibly upward facing channel moving up, and you broke over it. And that's usually pause for it wouldn't shock me to come back down and everyone is positive on Google. It would shock me if it kind of went vertical again. I think it's going to come back in, form some sort of a base on that 292 level and give you another chance. So that's my trend analysis. The trend is your friend looks great. The funds are holding. They have huge, huge positions in this. They're just holding their shares. We're going to the aerospace sector of Howmet HWM.
Yeah, Helmet was submitted by John, and Helmet is $1 billion fund manager stock, ranked number 30 as of today. And it's on a new gas signal today, but it's been on its long-term uptrend for a whopping 757 days, up 360%. So a three plus bagger.
And if, again, all members have their own ticker tool, which is Google based, and there's Google again. And just
Yeah.
following the long-term signal is really important and can cause lots of phenomenal long-term gains in a strong market. So definitely use your ticker tool. So here's how I see it. Cup, really sloppy handle, a breakout, and you failed, and you came exactly right to the close on July 30th, and you held it. There's your undercut, and now you're rallying back up. So funds are here. You're back on a gas. This would have been your ad day if you were interested. Um, this is interesting. So I think you're going to hit some resistance, and this would not shock me over the next couple of weeks and months as long as the market holds up. This climbs over 211 and off it goes. We're going overseas to Ivanhoe Mines. Where are we going with Ivanhoe?
Yeah, Ivanhoe was submitted by Margaret. Thank you. And I will say here, getting data consistently on Ivanhoe Mines IVPAF is kind of a little bit tough because it is an overseas international stock. But here's what we can tell you. It is a billion-dollar fund manager stock, even though it doesn't show up in your ticker tool having necessarily a rating. It's a NI for needs improvement because there have been signs of a bit of accumulation based on what we've seen, and a brand new gas signal, and you could kind of yeah. In fact, I'm fascinated to see what you think of this one. But it's having a great day today. New gas signal. That's what I got.
Yeah, so trend is great. Short
Yep.
term, long term uptrend now. Obviously, there's no volume because we're on a holiday week. The things that I'm concerned about is you're coming up under this resistance of October 17th or the 50-day simple moving average in red, and you hit it, you broke above it, and you sunk below it. So today's close to me is really important. If you can climb up and out of this, and it may take a few days, then I think you're climbing the wall of worry back to the high 11s. And this would be your structural low, and obviously it's a thinner ticker overseas, but the trend is your friend. I think no matter what, hold this low, 960, and ride the wave. But again, this could have got a lot worse. So you were at the 200-day simple, and it could have rolled up and under and came all the way back down to the sevens, or even worse, down to the sixes. But maybe this is enough to shake the weaker hands out. And again, we'll see how earnings and progresses. But we'll move to Lumen Technologies. I think this one was from Rob.
Yep, yep, absolutely. Rob submitted it. Thank you. It is not covered in our billion dollar fund manager research, so it's an NC. It's on a co-signal. It's been so for the past couple of weeks. It did hit a long-term uptrend 78 days ago and is up 45%.
Yeah, Lumen loses money, which is hard. Lumen is in the broadband services. We added a ticker to our ETF list, which covers a lot of Lumen-like stocks. So this is an area where an ETF might be more your friend. Short-term downtrend within a long-term uptrend. The long-term started on September 9th for trading days, and it rocketed up. It showed a lot of overheats. This is normal. So I would say it kind of poked above the 50-day simple. That would be your new support area from a risk perspective. But I would wait until you get some version of a gas signal, which would probably be somewhere around here in the eights. But this has been a tough stock. This is a crazy looking, deep as can be cup that
Wow,
is
yes.
nasty with a crazy handle. So Rob, you have a stomach of steel. I really am impressed how you could, if you own this, if you're still in this, but I think there's going to be opportunity, and maybe they have a window to make some money, but so far they're in the money loser categories. They're probably spending too much, but I don't know if even have a ton of sales. So this is where the ETFs for me come into play. Keep up the good work out there. So we're going to MedPace.
Yep, loan submitted MedPace, which is on a gas signal, has been so for the past, let's call it 4 months, up 27%. And it is not a billion dollar fund manager. I'm sorry, it is not. Yes, I'm sorry, correct myself. It is not a billion dollar fund manager stock. So it's an NC for our rating.
Yeah, short-term, long-term uptrend. You're no longer on an overheat, a very light pull-in. Set your alert at 625. Goes over it, party continues. Sorry, short and sweet. But this looks really good. I know the funds aren't that we track aren't here, but there's something going on in the med space, and this one's being rewarded over the past couple months where the market pulled back. I mean, look at that. That's relative strength. That didn't pull back at all. So that should be on your radar.
Yep,
All right,
absolutely.
Zuckerberg, where are we next?
Okay, Boyce submitted Meta platforms, Facebook, and yeah, it's had a tough couple of few weeks. It's been on a break signal for the past 26 days. It's down, actually not too bad, about 4% or so since the break signal. It is a billion-dollar fund manager stock, but it's an NI needs improvement, meaning that we saw decumulation, significant decumulation in the last reporting session.
Yeah, trend looks terrible. Um, so I drew this support area from 2023 October, and it held it in April, and it didn't really hold it here. You definitely are formed, you're making significantly lower highs, and it really threw up after that gap down off of earnings. And you're seeing trying to find some sort of a life to get from a break to a U-turn back to a gas. I would just simply pass on this. If you love Meta and you're in it, you've been tortured. I think at some point you have to draw the line and just take some profits down. And you're above the 24 EMA. You're probably if the market can keep holding, you could maybe find yourself going back up to the 50. And I think you're going to find a lot of resistance. I'd be really cautious. We'll move to MRUS, who looks like they got bought out.
Yes, yeah, clearly. In fact, yes, it's been a flat line, overheat. Let's see who submitted Maris. I apologize, just catching up here. Chuck submitted Maris. So yeah, I'm not sure if there's much to say about this one. I think when a company gets bought out, and I'm interested obviously in your perspective, Scott, I think you could have one of two things happening where it's a solid buyout accepted and the price just flat lines and obviously ends up getting ingested into the company that's purchasing it, stock goes away, or there's offers out there and you could have competing offers that come in that might affect the pricing. What say you?
Bought out by GenMab, all cash offer, 8 billion. You do you. I would just take my money and run.
Yeah.
There's not much to say. I would just run. Let's go to PARR Pacific
Yep.
Holding.
Submitted by John. It is not a billion-dollar fund manager stock. However, it is on a gas signal. It's been on a gas signal for about 40 days, but it's been holding its long-term trend for 197 days now, up 138%.
I drew an orange line. Let's figure out why. So the highs of February 2024, I mean, think about this. It was a $40 stock. It was a $12 stock, and now it's a $40 stock. This is what can happen when there isn't a lot of institutional sponsorship. And this can happen even with institutional sponsorship. This is why we date positions. We don't marry them unless they treat us extraordinarily well, and we see a great future with them. So, I mean, think about the torture if someone held this. And then finally, yeah, if you bought the gas signal down here at 17, you'd be thrilled. And if let's say you're a super long-term holder and you're like, I don't want to trade this stuff. If you're going to add new money, this is where you add new money on the gas signal. This is where our whole study comes in. And think about that. You probably could have broke even significantly quicker if you just been like, don't just do the buy every 2 weeks, just buy on the gas signal. So this is where you're now breaking out and over those highs and you're sitting down on top of them and this actually looks really good. Yeah, I see nothing wrong at this point. And obviously, your ideal buy point was 18. Your next area, I think this probably trends higher. The trend is your friend. Any comments, Mike? This is a crazy chart.
Yeah, yeah. I guess, the essence of what we do is not the dollar cost average down, which is kind of basically what you're talking about, Scott. So that's about the only thing I'll add. Yeah.
All right. Palantir. Uh,
Submitted. Yep. Yep, it was submitted by, hopefully I'm pronouncing this correctly. I apologize if I don't, by ABI. So thank you for submitting it. Palantir is currently on a coast. It's been on a coast for the past couple of weeks. However, oh, and by the way, it is a billion-dollar fund manager stock. It's ranked as of today 57. And the long-term uptrend has been in place for over 900 days with a return of 16x. So it's been a 16 bagger for anybody who has been lucky enough to be in it since May of 23.
All right, ABA. Close, Mike. That was a
Oh,
hard one.
oh, I'm sorry. So you got it. Thank you for correcting me.
So long-term trend is incredible. You could see how the 200-day simple, I mean, it flirted with it in August of 24, and it's just been a life-changing company. And I think what's good here is that you held this support of September. We had a teeny position and we got out quickly. Just this could easily come all the way back down to 140. And if AI reheats back up, I'm sure this is fine. It has a very, very lofty valuation. The funds are here. I'd wait for a gas signal to redeploy new funds, and this would be my area of stop, where I would say, you know what, maybe there's other merchandise in the AI universe or somewhere else where there's more opportunity. So long-term fine, short-term under pressure, be cautious. It's interesting. Right now, there's a lot of stocks that are recovering fast, but Palantir is doing really well, like today, relative. But if you look at the chart, it doesn't look that great. I mean, you look at a chart of NVIDIA, it doesn't look that great. The money's flowing elsewhere, and you've seen us move to things like, even this week, we flowed to gold miners. That looks great. We flow to medical devices. That looks super. We flow to some home builders. So again, this one is a tough one because we're buying off the bottom here. But I'd be cautious. Obviously, the hot trends don't last forever. We'll go to Reddit, which I think is a really phenomenal platform. But what do we
Yep.
think about the stock?
Yep. Reddit was submitted by Krishna Murthy. Thank you very much. And it is 41 on our billion-dollar fund manager ranking as of today. It's on a gas signal for the past couple of days, just transitioned from a coast. And we were in this. We had a very good ride. In fact, maybe you could kind of point out in the chart roughly where we had our ride.
I mean, I think we've been in this possibly once or twice. I think we even sold into strength once. But
Yeah, we did. Yeah, yeah,
yeah, I mean, whenever a stock, my friend Kathy Donnelly, she and her friends like Eve Bobach and the whole crew, they wrote the life cycle trade. And what they did was they studied IPOs and they call them like rare jewels. And a stock that this one didn't work out so hot, but it went from 50 to 229. And then it had like a death back down to 78. And you put these on your like I'm gonna don't forget about this list. That's the rare jewel list when it goes up like 300 something percent. And we've seen it recently with like CoreWeave and then it croaked and Circle and it croaked. And these are the ones you want on your watch list for later. And lo and behold, after Reddit croaked, we added a position. Why? Because the funds were there and the trend was there. And we did really well in Reddit. And we took it down just because it was a road tripper. We want to lock in a large majority of our gains. And lo and behold, it experienced the coast and then it kind of flashed. It's, I would say, choppy, forming a really tough base. To me, the risk needs to hold 183. You had a huge day yesterday on some serious volume on a kind of a holiday week. And this is today to me feels normal, but I would just draw an alert. And if it can climb over 216, then it probably gets back to 230, 230, and then it keeps climbing. And you'd think that all the AI providers want a treasure trove of honest feedback. And that really seems for me to come from Reddit. If you're considering a product, I would go to Reddit. I love that it's anonymous, so people actually tell the truth versus people, you can kind of suss out if they're telling the truth or not. So, anyway, I think you're forming some form of a base. It's lo and behold right here on the gap up low. This is logical where this would this looks like it may hold here, which would be
Yeah.
great. That's where my support, and then it could make its way back up and higher. It's a $1 billion fund manager stock on a short-term, long-term uptrend. And if one's not in this, this is where you could maybe look to add. So that's my opinion of Reddit. Today's a normal down day after a huge day yesterday. Any other comments on Reddit?
No, I took the words out of my mouth about it. Seems like the downtrend is kind of decelerating. So could this be the beginning of some type of base, cup, etc.? Yeah, definitely it could be. Manage your risk regardless.
Yeah.
All right, the next one to move on is from Phil, an ETF. In fact, I think this is our first ETF, REMX, which is the VanEck Rare Earth ETF, which we just added to our database of ETFs I think about a week ago, if memory serves.
Yeah, I'm
Yep.
going to go into the members area and I'm going to go to the live sheet and I'm going to click on the very bottom to ETF ranking. And REMX is, do you see it anywhere? Sorry, it's
I do
hold up.
not.
Let me see if I can use this over here.
Yeah, here. I'll find it.
Here it is. Okay,
Oh, you
so
got it? Okay, great.
I'm jumping around. Number 18, short-term, long-term uptrend. It's up 87% year to date. How cool is that? So let's go to REMX. REMX in a short-term, long-term uptrend. That's awesome. To me, I see a wedge. To me, this is your support low. You're now forming higher lows. It would not shock me. You got your green arrow, so higher propensity for it to climb up into the bottom of the wedge, and I would expect it to break up and out. That would be my expectation. Manage your risk, Phil, but I think this one is great. That's why we added it to our ETF list, and we have a close eye on rare earth metals. Mike, any thoughts?
No, it's a super interesting ETF. I'm glad that it's on I'm sorry, Phil's radar, and yeah, you can now track it on our database.
Yeah, so every day that's updated and re-ranked every day, and we're
Yep.
gonna go cruising. What do you think about Viking?
Yeah, so Viking was submitted to us by Tim. I will say that next year officially, my wife and I are going to become for the first time Viking customers. So we're excited for that. Viking itself is number 21 on our billion-dollar fund manager list. As memory serves, it's been kind of working its way up the list to now number 21. It's right on the verge of overheat. In fact, as of us, oh, actually, the overheat just came off. So it's right on the verge of it, right on the line. So don't be surprised if it goes to overheat, Tim. So just watch out for that. And long-term trend's been holding now for 217 days, up 68%.
Yeah, we had a position in this. We it was a profitable trade. And I'm not sure exactly when. Something tells me it was in this region where we exited. But it's a breakout, and I would expect it to sit back down, and 65 would be your risk. It's at 67. So could it kind of come down here, sit down, form some sort of a high handle, and then go up and out? This looks great. Funds are here, trend is there. It may not even give you that chance. It may keep climbing. So yeah, looks great. It's definitely on our radar. And we'll end it with Zim.
Zim integrated shipping was submitted by Arthur. Thank you. And this is one of those darlings back from COVID era. I remember this was an IBD stock, and in fact, I think probably back years ago, traded this a few times back during the fun of supply chain issues, the whole bit. Yeah, in fact, there's a long-term chart that Scott just pulled up. You can kind of see the wacky action of Zim. Right now, it's on an overheat, and it's been actually on a gas signal now overheat for about 36 days, up about 45%.
All right. Well, you can kind of see, I want to zoom out. So November of 24, May of 25, and November of 26.
Yeah,
Test,
there you go.
test, test, breakout. Now, obviously, this is really steep and there's something going on behind it. So it's been on an overheat for a while. So I'd expect this to pull in and give you another chance. Because it's so steep. So that would be my expectation. And then I think it clears the 20 buck level and off it goes. So short-term caution, trend is there. This one looks great. I would just be patient and let it set up and give you another chance to reload. Okay, Mike, what did I miss there?
Yeah, just to mention that it is not a billion-dollar fund manager stock. Just want to make sure that was clear as well.
Yeah.
Awesome. We are done, Scott. That was a 22 ticker party, and hopefully I always have fun with these. Hopefully you do too, and hopefully the members get a lot of good stuff out of it.
Yeah, so I'll end it here with thank you for being a member. If you want to become a member, reach out hello@investwithrules.com or go to investwithrules.com. We give you a free ticker tool of the S&P 500, so that can be in your tool bag. We hope it really helps you. We follow the trend, we follow big money, we follow risk management rules. If you're like, this would be totally cool if someone did this for my portfolio or the larger positions in my portfolio, if you're like, I really want more time freedom. Our totally separate business is IWR Advisors. Again, that's a complimentary. We care about you. We want you to do well no matter what is going on in this world. So let's stop there. Mike, any Thanksgiving Day comments as the markets close tomorrow?
Well, everybody, for those in the U.S., happy Thanksgiving Day. Enjoy yourself. Please enjoy friends and family. If you get out the market for a day, we'll be back on Friday. No video Friday, but we will be obviously monitoring the live sheet and doing our standard thing. But just keep in mind with the market closing at 1 o'clock, we'll be starting our trading window roughly 11:30 East Coast time, just to give you a heads up.
Love it. All right, happy Thanksgiving. Trade well. Bye bye.